There are three types of leverage in business, and if used correctly, it will enhance the effectiveness, the productivity, and ultimately the value of a business. I'm Arthur Petropoulos, Managing Partner here at Hillview Partners. We're a middle market, lower middle market M&A and capital advisory firm, helping companies generating $1 million to $10 million a year in pre-tax earnings or profit to sell their businesses and secure capital. And so I'm no history major, but to drastically oversimplify humanity into different eons, if you will, you start off with the Greeks and the Romans and the Egyptians and kind of even Genghis Khan, the Dark Age, all of that. And what was the real means of leverage in that time period? And it's humans. It's human capital in the sense of being able to put many, many bodies towards brute force tasks of building pyramids, digging aqueducts, whatever the task may be. Now, progressing forward into the next time period, you have the Renaissance going up through the Industrial Revolution. And although manpower or people power was still a valuable commodity, the new type of leverage that was implemented during this time period was capital. And so if you read about how JP Morgan started, it was really bringing capital from Europe to support industrialist opportunities here stateside, whether it be Carnegie Steel or Rockefeller Oil or whatever the particular, Astor fur trading, whatever it may be, capital became the leverage point. And now, in the modern era, well, we'll get to what that leverage point is soon, but let's take a step backwards and say, what exactly is leverage? And so the idea of leverage, and I don't know if the quote was Blaise Pascal or whoever it may have been, was give me a fulcrum long enough and I'll move the world. But the idea of leverage is that a certain amount of input can yield a larger amount of output. So think of the ideas of pulleys and levers, and if you ever used a hydraulic forklift to move things around, but the idea is a jack for a car, that the longer, if you will, the fulcrum, the thing upon which you're applying force, the more you can lift with it. Think about trying to lift a cinder block on the ground. If you put a pencil under it, it's going to take an awful lot of force to move it. However, if you were to put a long stick, a shovel under it and try to push downward, you'd have a lot more leverage, the opportunity to lean on something to apply force that will yield a disproportionately productive output from it. And so historically, again, going in these time periods of kind of these pre-industrial days of just the more people you could put into something, you pay someone $1 to make $2 worth of productivity and repeat, that is human leverage. Now, getting into the world of capital, you can think of the ability to borrow money creates leverage. Think of how most real estate deals are done, that 20% equity goes down, 80% is borrowed. However, if the value of the asset goes up 20%, you've doubled the equity value. That's the idea of leverage. Again, having multiplicative effects on the upside based on the same amount of input. So getting back to the earlier part of this video, we say, what is the modern day leverage? What is the third type of leverage? And from our perspective, it's technology. And this can take several different forms, but the primary ones are going to be software, are going to be media, and the most recent, but perhaps the most impactful, is going to be artificial intelligence. And so this is the idea of multiplying forces, multiplying the efforts, and therefore allowing fewer presses of the button to create more impact. And so let's talk about three examples of technological leverage. So software can be the idea of multiplying efforts or calculating things quicker or running things through processes differently. If you have templates, if you will, for documentation, and therefore you only have to put in 5 different words to recreate the entire document, well, that level of leverage, if you will, technological leverage, and amplifying the amount of documents you could make in a short amount of time, that's a simple version of software leverage. Think of architectural software, renderings of CAD drawings, of prospective buildings, of site plans, things that can be done at a much more rapid and accurate pace when not being done manually. That's the leverage of software. Now, from a media perspective, it's the idea of duplicating efforts. So say we have this video on YouTube, it gets 2,000 views, it's a 10-minute video, and the average watch time is a third of that or half of that, let's say. Then at 2,000 views of 5 minutes of watch time, you have 10,000 minutes of watch time. Divide that by 60, it's a number larger than I can calculate while I'm recording this, but it is effectively Arthur talking to an audience or having one-on-one discussions for hours and hours every day. And that's part of the thought behind why we have the content out there, is that there is leverage. If every single day there are hours and hours of myself discussing things with prospective clients, with people in the ecosystem of what we are doing, then we are educating at a multiplied rate. The filming of one video has meaningful leverage because that media is replicated at no incremental cost to us, but at material incremental benefit. And so that's kind of the examples, if you will, of software, of media. And so now the third prong, and the one that we are incredibly excited about and doing more and more work with, is artificial intelligence. And so the idea of that is now replicating efforts. If at the simplest version you can think of it as just having more and more human capacity without having more and more humans to pay, right? Or alternatively, thinking of having super productive humans, well, that is something that's exciting. And so let's take research, for instance. If one person could do X amount of research per day, yet with even the simplest of ChatGPT or Grok or whatever the particular service one is using, if one were to use that AI and now they can do 3 times as much research for the same amount of input effort, that is leverage. That's material leverage. And so we're going to have a video later this week dedicated specifically to the topic of artificial intelligence. However, we wanted to talk about the concepts of leverage because as we're growing our business, as we're working with other businesses that are looking to sell, looking to find capital, the conversation always comes down to what are the leverage points? And people say, well, what is leverage? How does it exactly work? And so we thought it was worth making a video to discuss what leverage is, what the types of leverage are, have been, and what they will be. And so to recap today's video, over time, there's been 3 main categories of leverage. The first and simplest of these are human leverage. Lots of bodies going after the same goal, paying X, receiving 2X, and keeping the spread. And that's the whole idea of just putting more and more human effort, human capital into something. The next is capital leverage, being able to borrow money. And so at its simplest, if you could get a 20% return on capital and you could borrow it at 10%, then you'd borrow as much as you could to deploy at 20% and just keep the spread again. And third, the newest form of leverage is technology, technological leverage. And this again takes 3 shapes from our perspective. The first being software leverage, the second being media leverage, and the third and newest and what is likely to become the most driving force in many different sectors of the economy is the leverage gleaned from artificial intelligence. So that's a thought for today. The types of leverage, how they've evolved over time, and how businesses can effectively get more output for the same level of input. Hope the week's going well for everyone. Keep pushing forward. God bless. We'll see you next time.